You never want to do this when you're trying to raise capital for real estate investing. A lot of people, when they're getting into real estate, they're wondering, hey, do I need a deal before I raise the money, or do I get the money before the deal? The real answer is both. And you never want to ask anyone for money. You simply provide an opportunity. The key to it all is that you're putting it out there into the universe, and then you're allowing the deal to do the selling, to where you're not asking your friends, your family, anyone for money. You're simply providing an opportunity, and you're asking them who they know. So do me a favor, if you like this video, go ahead and like it, put a comment in here. I want to know your questions about what you're about to see and what you know about multifamily. I want to know about that. And then share this thing, so that way more people like you can get this information and help them, okay? Let's go. I'm going to go ahead and share my screen. I'm going to walk you through the roadmap that we take everybody through when you're trying to learn how to get into multifamily by your first or your next, say, 10 to 30 unit apartment building. Get bigger. You're getting out of duplexes and fourplexes. You're getting out of single family. You're getting out of short-term rental, fix and flips, all that other stuff, and you want to level up into the next level game, but don't be trying to go bigger than 30 units on your first one. I don't care what the other gurus are trying to tell you. You have no chance getting a deal over 30, 40 units if you've never done this before. It'll be hard enough just doing it in the 10 to 30 unit space, which is where you stay focused, because that's where the mom and pop space is at. Lenders will give you a loan. Brokers will give you a deal. Property managers will deal with you. Investors will give you money, even though you haven't done one yet or you're newer to the space. Trust me in this. I'm going to walk you through this roadmap and show you why this is, and hopefully this makes sense to you, so that way you can take the next step. So here we go. Okay, so this is the roadmap anybody that's going to start and get into multifamily you need to get into. This is not a hobby. If you're trying to see this as just a simple hobby, maybe do a deal or something like that, it's probably not the right game for you. This is designed for folks. You are going to officially start a multifamily investing company. And yeah, you may only be looking to get one or two buildings. That's fine, but it's not a hobby. It's not a second game. If you want to play the second game, hobby game, go play in the duplexes and fourplexes. Stay out of the multifamily, which is 5 or more units. Because in order to do this game correctly, raise some money, because the biggest roadblocks that people have that hold them back, tell me if this sounds like you. I don't have access to capital. I don't have access to good deal flow. If I could fix those two problems, meaning if I'm asking you, if I put $5 million in your bank account liquid today, and I had 3 to 4 decent deals coming across your inbox every single day, would that solve 90% of your problems? Because then it just becomes a knowledge game, a skill game to execute, right? But if I could solve those two problems on deal flow that's good and access to capital I could strike, you have the motivation, I'm guessing. So that's kind of where this comes in, because you can't do the cart before the horse, horse before the cart, that whole game of money before the deal, deal before the money. It happens concurrently. And let me show you what I'm talking about. So everybody that kind of comes in, right, you got to get onboarded. You got to go through that process. Then you come into the stage of what I call our business in a box. And whether you do this on your own or you do it with other people, I don't really care, but you have to set this up. What I mean by this is you're going to set up an LLC. You're officially a business. This is your holding company. You're also going to put a little frontage on it in terms of marketing. You're going to have a website and a CRM, a client relations manager, that you're going to put all your potential investors in. This is going to allow, and the reason why this is so important, I'm going to walk you through this in a second. Guys, a broker's not giving you a deal if they don't know who you are. An investor's not giving you money if they don't trust you. Lenders aren't giving you money on a deal if they don't know you. So in order to know you, they need to see you. They need to have some presence out front, right? Which is why you set up an official business. You are running a business now. That could be in Wyoming, Delaware for your holding company. You're going to put a little marketing frontage on top of that with a website, CRM. So that way you are who you are. You're going to tell your story, because that's how people are going to connect with you. Remember, people don't buy what you sell until they know why you sell it. People are investing in you. The deal will do its own work. The deal will bring them in. The deal will actually be it. But no one's investing in doing anything unless they know you, like you, and trust you. This is the process of allowing that to start. How do people like, trust you, and grow that? Now you go into the market selection. You're going to select 3 states. Now, you may be in a good state where it's a good state to invest in. If it's Texas or the Midwest or a red or a purple state, awesome. You're already there. But if you're in a tough state for landlord-tenant laws and you're going to be investing out of state, you got to do the market selection process. And you're going to select 3 states. You can use our AI, or you can any AI out there. It's pretty good. You're going to go in there and you're going to be looking for population growth, job growth, median household income. Population growth, job growth, median household income. That's going to allow you to then put in the top 75 MSAs, metropolitan statistical areas, and you're going to organize the data by that. Population growth, job growth, median household income. We have specific prompts and stuff that work on our Mentor AI that do all this for you. But you're going to select those markets. Start with 3 states, and you're going to narrow it down to 1, and then you're going to dive in. And then it comes right around the corner to where you get broker and deal flow. There are only 2 ways to find deals. Direct to the owners, these are for deals that are not on market. Direct to the owner marketing. Direct to brokers. Brokers are out there dialing for dollars every day. They have access to pre-market deals. And once you understand how deals come to market, they are not on LoopNet and they are not on Crexy. So if you're on those websites, that's fine, but you're only seeing 20% of the inventory. You're getting what I call the leftovers in the industry, which is why most of them don't make sense, right? Most of them don't make sense. Broker flow is the correct way. You want the pre-market right before the websites. That's where 80% of the deals happen. 80% of the deal flow happens. You need to know how to get there. Okay, you got to learn that. Then you're going to do a market trip. You could already be in your market. That's fine. If it's in your backyard, awesome. You already know it. If you need to travel, this is where the market trip happens. Why is this so critically important? You're going to set up the local brokers. You're going to meet them. You're going to set up the local property managers. You're going to have those connections ready to go or locked and loaded. Local financing and local lenders. Obviously, we have lenders and capital partners in our community and everybody we deal with. That's fine. People get access to those. But you need local credit unions, local regional banks, commercial banks that will finance multifamily in that area. So that way you have them in your back pocket. Renovation construction crews. You're going to basically set up your team. Renovation, property managers, lenders, brokers in that market. You'll know the good areas, the bad areas, where to invest, not to invest, where the rent's at, where's not, where's the path to progress, where it's not, where are things going in the market, where are they not. You got to get on the ground. You got to get on the ground. You got to know it. You got to know it. You got to know it. That's why the market trip is so critically important. Then you come into the capital part, okay? This is where no one's going to ever commit to you and say, yeah, I'll give you 50 grand right now, let's go, when you don't have a deal. What they will tell you is, hey, John, when you have a deal, yeah, sure, I'd love to invest. If you're at a backyard barbecue and you're chatting with folks and talking about what you're doing, you're officially a multifamily investor. So you could be a doctor, an attorney, any other industry. And if they ask you, hey, how are you? Who are you? What's going on? You're like, yeah, I'm doing well. Doctor stuff's good. We're buying some apartment buildings and stuff. Watch the look on their face when you say that. When you say, yeah, I'm a dentist and I'm a multifamily investor and we buy apartments with investors around the country. They're going to be like, tell me a little bit more about that apartment game. Tell me a little more about that. What do you mean? And you'll be able to talk to them about that. Trust me, it's a learning process. This is what's going to cultivate what's called soft commitments. Soft commitments. Because what that person's going to likely say to you is, well, that's pretty cool. They're going to ask some questions. Well, like, do you have any deals right now you're doing? No, don't have any right now. But when we do, would you like me to send it to you? I would love that. When you have a deal, John, send me the information. I'd love to take a look at it. Boom. That is a soft commitment. They're going to go into your CRM, which we already set up here in the Business in a Box section. That way you have a list of all your potential people, right in a nice little client relations manager. We give this to everybody inside of our community. But setting up the website, the CRM, all this kind of business in a box stuff has to be set up because that's going to allow you to create soft commitments from people who actually will invest with you because they know you. You just don't have a deal yet to invest them into. You're creating a little bit of that warm commitment before the actual deal happens to tee it up. So that way you're not running around with your tail between your legs when you actually get a deal. And then you're freaking out because you got to get this thing closed in a certain amount of time, but you're chasing. You didn't even set up your market. You didn't set up your vendors, your property managers, your lenders, local brokers, renovation construction crews. You don't have this team in place, so you feel scatterbrained. This is why it all gets set up through stages 1 through 6. So that way, by the time you're coming over here and you're actually writing offers on these deals, letters of intent, and then you come around the corner and you actually get a deal locked up and under contract, all the pre-work's already been done. You have a list of 30, 50 people in your CRM. You're going to email it out to them. Here's the beauty. You're not going to ask them for money. You're going to send it out. You're going to say, hey, here's the pitch deck. Here's a little summary on it. John, who do you know that may have some interest? We're closing in 60 days. I'm raising 500 grand. Who do you know that may have some interest in investing in that? Here's the summary on it. Don't ask them. Ask who they know. And here's why it's so important. Because they're going to respond back to you. They're going to say, let me send it out to my friend Eric. They'll do that. They're going to send it out. Then they're going to respond back to you and say, why didn't you ask me? Because they're going to open it up. You don't think they're not going to open this thing up and look at it when it shows them that they can make 15, 18, 20% a year on their money and wipe out their income taxes for the rest of their life? They're going to open it up. And they're going to take a look at it. And because everybody loves FOMO and everybody loves things they can't get, they're going to send it to their friend Eric. But then they're going to respond to you and say, hey, this seems like a pretty cool little deal here in Texas or wherever it is. What's the minimum investment? $25,000 to get involved. There's a summary on it. Why didn't you ask me? Well, listen, I didn't want to impose upon you. You're a friend of mine. So I wanted to ask who you may know, and we're going to be closing on this thing, and we're doing it, and blah, blah, blah. Presumptive, right? Pull the sale away. Create FOMO, urgency. You're not asking anybody. You're simply providing an opportunity. Everybody wants to invest in real estate. That is never going to be your problem. Is it a good deal? Does it make financial sense? And do I like you and trust you? And don't ask anybody for money. Ask who they know. Pull it away. Create FOMO, urgency, scarcity, all that. It's just natural. They'll bring their way into it because the deal is going to sell them. You don't have to do squat. It's going to answer 95% of their questions in the pitch deck. But this is why it's so critical. And then you move through the normal due diligence process and into the management. That's all set up. So when you close, The management company that you set up here, right, in this whole market setup, all that stuff is already set up. So that way, by the time you get to actually closing on it, management company's in place, you have all your brokers and lenders and everybody in place, you're ready to go, and boom, now this thing is off to the running. And then you become an asset manager, because the last thing you want to do is be dealing with toilets and tenants every day, especially you're a busy person, right? You can't be taking on another job. You're busy enough with your kids, your family, what you're doing now, that this thing can't add another career to you. You don't have the ability to do that. So this is why you become an asset manager. You're the CEO calling the shots, right? Making sure the property manager's doing their job every day. It takes an hour or two a week to make sure that. So this is the roadmap. This is how it works. Obviously, a lot of nuance inside this, sure, but this is how the game works. So when you hear the saying, is it cart before the horse, horse before the cart, deal before the money, money before the deal? The answer is both, and it happens concurrently through a proper roadmap to go and execute. All right, so I hope you like this video. If you have any other questions, comment below. We'd love to get your information and what you feel about this process, and if access to deal flow or access to capital is your biggest problem and hurdle. So next time, take care and happy investing.